So Tesla had a very unusual print on Friday. We had a 1.7 million in premium for the 100 strike. Notice where they bought this. They bought this at 178.74. That was the spot price when they got the 100 strike. And this is not that far in terms of expiration. This is about 3 months from now. So this person has a very large order, 1.7 million, for a super far out the money strike here. And also this one was above the ask. So you can see there in order details. And if I go over to the chart here, you can see that we closed on a very critical support. The blue is kind of matching with the red because the red shows the closing price of Tesla, which was 180.19, and this 180.36 level that goes all the way back to 2020 in November. You can see it's acted as a support numerous times, mainly this day over here on March 8th of 2021. Also, this is kind of a demand range. As you can see here, we also found support around this area later on. We found support over here back in December of 2020. And as you scroll down, you can see we found support again recently, last week over here where we bounced off twice and yet again on Friday. So Tesla, it's very crucial it holds above here if you are a bull. Some people I saw were talking about this, at least in the Discord, they're talking about it being a potential double bottom. Yes, that is possible. However, it's not good when you see this forceful of a down candle like we saw on November 9th and then a pickup after, because first of all, this is a bear bait candle. We had a major pickup the following day, which means there should be follow through in the days following it. The fact we only had 2 green days after and it fell following that means that this is incredibly weak. So is there still a possibility we could bounce in a double bottom formation? Yes, but if this level breaks, especially the low of this day over here on November 9th, which would be around like 177, if that breaks, then we will see substantial downside after that because this is a major demand zone. Now, the main thing I want to talk about today is SPY. We're in an interesting position, at least in terms of price right now. You can see this white box from here. I mentioned this on our Twitter on Friday, but just to clarify, this box, roughly 374 mid to around 389, is heavy amounts of dark pool prints, and not only a lot of dark pool prints in terms of quantity, but also a lot of premium. So they're really quality as well. So quality and quantity here in terms of signature dark pool prints. That is, we've seen billions upon billions, every single one of these daily candles within this range. Some days even upwards of 4 or 5 billion, which is very uncommon, especially for SPY. So the fact we are above all of these right now is pretty interesting. I know that there are a lot of people that are fairly bearish in the market. We also, by the way, saw some decent put flow finally start to come through. We haven't seen puts like this in a while. These are decent sized puts, as you can see, like 1 million, 4.1 million, 3.9 million, and all of these are above the ask, as you can see in order details. So these are interesting prints. We haven't been seeing these that much in the past month. If you remember, earlier in August and especially September, we saw tons and tons of these prints, which was warranted because look what happened between August and September. A lot of downside. So I'm going to be monitoring types of these prints, at least like the ones that are farther out the money. They do have a little bit further of expiration, about a month to 2 months out now, and then also a lot of premium with them being above the ask, because then that can give us a clue on when the trend may be starting to shift. Now, is there still potential for upside? Yes, it's very viable. If you remember in August, those puts were hitting the tape in between this time in early August and continued all the way to the top, and they ended up being profitable, pretty profitable that is, because they were all 1 to 2 months in expiration, so they were able to take this downside move here after. But I do want to show you guys as well this trend line. I mentioned in other videos, but you can see here from all-time highs, it drags across to previous resistances from this year back in late March and also mid-August, like I shared with you earlier. This one is fairly close right now. Now, a lot of people suddenly seem to be bearish, at least me looking through Twitter and stuff. I would not put it out of question that it is possible we end up touching this top of this resistance here. Now, it must be noted that the only way this could end up hitting is if this box here, but more specifically this trend line here, is able to hold. And I've referenced this trend line numerous times now in the past couple of weeks. This is the one that connects to the COVID low, goes to the previous yearly low back in June. And you can see here we are above it right now, and we have closed above it for 2 weeks in a row, as you can see here on the weekly chart. So it's very important that we're able to stay over, especially on this next week, because we did print a doji candle for the past week. So this is an indecisive candle. That's what that means in terms of just technicals. So the fact that we printed this means it could go either way. Next week it's kind of up for grabs. So we are going to want to see that we're able to maintain over this COVID trend line. Something else I'd like to bring your attention to is the VIX flow from this past week. So from Monday to Friday up here, we're starting to see more and more calls hit the tape. The majority of these puts that you see here, at least the 3 of them were earlier in the week. These calls have been consistent all throughout this week, and they have all been out the money with a little bit more expiration on them, plus a lot of premium on them. Now, if we go to the chart over here, you can see the pennant formation. You see the top resistance here for this blue line, and then also the bottom support here for this blue line. You can see that we actually broke below this blue line as of last week, which the fact that we broke below it, especially on the weekly, technically speaking, would be bearish for the VIX. However, last time we broke below the line, which was back in August, look what ended up happening after. We consolidated below it, kind of similar to what it's trying to do right now, and then it popped very hard and continued upward after retesting the pennant level and just went all the way up straight to around 35. Something I want all of you to watch is the similarity between back here in August and then also right now, and not only on technicals in terms of maybe seeing consolidation like we did in August with a gap up back into the pennant with continuation after, but also on the flow spectrum. Remember, this is fairly unusual calls. Now, is it a lot where it's like super prevalent? There may be a move coming up. Not quite yet. However, that can change as of this week, and that's something I want you guys to watch. Remember, right now, this is from last week, Monday to Friday. If we go back to August, this is the beauty of having this historical flow tab here in Cheddar Flow. If you go back to August, right around the time, let's say August 8th to roughly August, let's see, we'll go to the 19th. That's a 2-week span. If we go there, click the VIX, also filter for above 1 million. I want to see what big money is doing. And we go back to there. Look at this. Look at how many unusual calls there were. All of these were out the money at the time, plus millions upon millions of premium. Scrolling through all of these, you can see there was quite a bit throughout this time period, especially between August 17th and August 19th. Now, let's go back to the chart and check when those days happen. You can see right here, August 17th, August 18th, August 19th, and a huge gap up after with continuation upwards. So, basically, all of these calls were front-loaded before VIX popped off, and that is why I'm looking very closely, especially this week and next week, to see if we're able to check out more of that continuation in the call flow. And now here's an update on the QQQ setup, at least for the resistance line. Remember, this is also similar to the one I showed you earlier on the SP 500. Goes back to around all-time highs and then drags down. We had that fake breakout in August, and now as of this week, we actually got rejected from this line. We had one daily close over, but this was kind of a fake out in a sense because it got rejected and fell back in the following day after a gap down. So as of now, we are below this. If you are bullish, especially just in the general market, it doesn't even have to be just tech, because tech does need to get picked up for the general market to also go. You are going to want to see a continuation above this yellow line right here, which right now, obviously, it's going to change because of the angle, but right now it's roughly around 286 to 287. So you're going to want to see that get above that level for continuation upward, and unlike it did on Tuesday, you're going to want to see us hold above it so it can continue higher, because as of now, this will act as a resistance. This is a resistance range, as it has acted as a resistance in the past, even though it did end up going higher later on here. It did act as a resistance a few times before that had that run up over here after the big gap up back on August 10th, and the same thing applies to end of March, early April, resistance twice up around this area. Also, one last thing I'd like to talk about today, we did have the clean rejection this past week on Tuesday of this orange trend line. Remember, this is the one that goes down to the 2009 lows, which I've showed in many videos now. But as of now, this has been a pretty clean rejection off this retest. And for any type of bullish emphasis, this level must be broken to the upside, which just so happens to be around a similar area as the line I was showing you guys earlier for the S&P 500. So as of now, this box here, a lot of dark bull prints, but then also overhead, we have quite a bit of a resistances as well. So right now, we are right between them, and so far, there's not as much confirmation in terms of the medium to long-term trend, just because we are chopping within this range. So we will want to see confirmation, whether it be above or below, in the coming weeks to give us a better sense on where the market will go.